non-farm payrolls have come in hotter than expected, and the unemployment rate has gone up. So what does a mixed bag data report mean for the market? Let's look at the charts. First thing we should pay attention to is the yield, because this data report is going to affect that, and that yield is then going to affect the market. And right now you are seeing it start to tick back up, which was the warning I gave yesterday in last night's video. The weird part for me was actually the yield. When the news originally came out, the yield actually dropped off and gave us this wick down to this 4.061. And what I noticed with the TLT was TLT at that time was actually dropping. Bond investors were not believing that even the yield coming down was the actual move, and they turned out to be correct. And if we flip over to the bonds, they are dropping like a rock. And if you remember, we were looking for it to come up into this zone up in here, this big supply, big resistance zone in here, maybe a retest of this overall structure. But we mentioned, that's why I put out a warning video later in the day. I actually put out 2 videos yesterday because I saw this. On the 30-minute, which is something I like to use in my shorter time frames, we noticed we were getting a divergence here. I exited my position in this trade right in here just because I like to get out before those big data reports come. I got out like a day early. Now, what ended up happening was we popped up and we created an even stronger divergence, and that would be a triple divergence. If you look at the MACD here, let's spread it out so you can see how nice this looks. It gives you this nice downward angle telling you that price is getting tired to the upside and it needs some kind of catalyst to probably bring it down. Now, with a mixed bag report, we have good news for the market, which is actually bad news, and bad news for the market, which is actually good news. So a strong jobs report is a good thing for the economy, but it is a bad thing for the market because that means that we are going to have to raise interest rates higher to get inflation down. Unemployment ticking up is bad for the market. It signals towards recession, but the market will see it as good because if unemployment goes up, then the Fed will not have to raise rates as high as expected. So the mixed bag report is kind of confusing people right now, but TLT dropped out of this like a rock. It is about to hit right where I kind of think it's going to find some support. I genuinely think that we have a little more upside. A lot of the times in these mixed bag reports, we get this sense of fear in the first day, but then overall in a mixed bag, it's not bad news. It's kind of like you have to say, if bad news and good news, you get both, then they even out in the middle. And then you look at what the overall trend is going on right now, and that trend is going up. So I still believe that this will just be a pullback, and then we will see an extension to the upside to possibly fill the gaps. Now, one stock that you guys know I like to cover is Apple. And Apple did hit this nice resistance zone. It popped higher in the morning. Let's just pull up a daily. And we're in that resistance zone. And you can see we passed yesterday's high because everyone got excited probably about that unemployment number, thinking that rates will have to come down. But then they are woken up by the non-farm payrolls. So right now, the market is trying to figure out, is the market going to go up because of unemployment going up and rates coming down, or is the market going to go down because non-farm payrolls was higher than expected and rates will have to go up? So that's what the market has to decide over the next couple of days. What I genuinely think will happen from this, because it is a confusing mixed bag report, we are most likely going to see some sort of pullback, even in Apple, to these moving averages, and then we are going to find buyers at this level. We will extend back up into the gap fill area, and then that's where it tears down, possibly with the CPI numbers coming out bad. So what you need to look forward to is another piece of data in the future that is going to shake the market, because this one didn't do it. This one is confusing people, and people will sell because of this. But overall, a mixed bag report most of the time will lead to just a pullback and an extension of the overall trend until you get actual news that is seen as the market as really bad, which I believe will be that CPI. Mark your date right here, Wednesday the 13th of September. That is when the CPI report comes out. So pay attention to that. We're going to break into the SPY real quick just to see what's going on. It kind of looks similar to Apple. It kind of pulled back up for a moment, and I'll talk about what these yellow lines are in my afternoon video, so make sure to like or subscribe. If you subscribe, then you might be able to see my nighttime report on your main feed, so that would be great, and I'd really appreciate it because I am a new channel. Everyone's still looking at this head and shoulders. How high can this right shoulder go? The truth is, if it passes this head, then it's no longer considered right shoulder, but we will get a nice daily divergence most likely. So what's happening right now, though, is if you look at an hourly, we are hitting exactly where that gap resistance is starting. So we stopped right before it. We pulled back for a few hours, probably some people just getting out before that data drop. And then this is the confusion. People jump up into this area. There's sellers in this area. This makes total sense why the market would want to come down from here. What I'm looking for is it to come down, base out, give me some structure, kind of create a V shape almost, coming down, going back up, crossing through this high here, and then giving us that extension to the upside. This is something that I'm paying close attention to. This is my overall theory, is we are going to stop somewhere up in the 456 area or somewhere in between here, and then we will see the rip. So I think stocks will come down for a few days, but overall, I think it is going to swing back up and give us another uptick before those CPI numbers come out. So pay attention to that. I'm just going to switch over to a daily and go to the Qs real quick. Nothing really different here. Oops, I drew a line. Sorry, I don't know all the buttons to delete stuff yet, but on here, once again, we'll touch on these yellow lines tonight. So make sure you subscribe so you can see what these yellow lines are about, these thick ones right here. But as you can see, we are actually getting a pretty perfect retest of that trend line, which is exactly what I said a few days ago. We are most likely, I think I said that right when on this day here on Tuesday, when we were just passing this, I go, this thing is going to most likely touch this trend line, because this trend line goes all the way back. If I zoom way out, look how big this is. The trend line goes all the way back to January 6th. And that's how far we've run since this. And that's part of the reason why I see this as more of a bubble market, like bear market rally still, because we've only had one serious pullback. So when you only have one serious pullback in an upward move, it's kind of worrisome. I mean, this consolidation is good, but overall, over the last, since May, we have not seen a significant pullback to the 50-day, and we have not reconnected with the 200-day moving average. So that will be most likely what I expect to happen over the next month or two, is we're going to reconnect with those moving averages. So, but right now we are getting a retest. We could see rejection off that. That's what we're getting here. I'm sorry that my bars are just all blue. It just helps with how I trade, but this is a red bar right now. We are down 0.05%. Most likely we are going to come back down into this area here. See, there's a top, there's another top. We have all this stuff here. I'm going to delete this line in a moment, but we have support, resistance here becoming support. We gapped above it here, we kind of tore through it here, but we have another resistance level here. We took it back, and now we can most likely expect this to come down into here, meet up with these moving averages, and then extend to the upside possibly for another touch. And that happens right around that September 13th CPI data. So pay attention to that data. Most likely inflation is back in the market. 2 to 6 months of decent data is not enough to bring that percentage, that inflation rate down to 2%. Right now we're at 4%. Keep that in mind. So overall, the main thing I see happening after this is most likely we come down, maybe we touch here, we bounce up, then we come down here for a nice little A, B, C pattern, and then we see what happens around this level. And I'll tell you why I believe that this level is very important in my video tonight, so make sure to check in for that, okay? The very last thing I just wanted to show you was the VIX. The VIX is popping a little bit lower. God, I keep doing that. Okay, the VIX is popping a little bit lower, but it is not making a new low. So what I think will most likely happen is we are going to see that pop up into this trend line over the next couple of days, and then we are going to see it funnel down into this area, retesting this, giving us another divergence, and that is going to be where it rips to the upside. And if you watched my video last night, you know that I think that we are going to be seeing a VIX above 20 for weeks on end. I think for the next 2 months, you are going to see a high VIX rating. I do believe over the next 2 months, we are going to see that 10-year yield, the 2-year yield, those are going to spike above the levels, above the highs, which will really shake out the market. We're going to see a significant drop, keeping the VIX above 20 for weeks on end. And then we are going to see some kind of reinversion of the curve. We already did bonds, but most likely what we are going to see from here is it did break out of this. Most likely what I'm thinking will happen with bonds is it's going to find some kind of structure, maybe even fill this gap, come up, touch into here, and then we are going to see a plunge possibly down into this 88.14 level. So just make sure you're keeping everything in front of you. Pay attention to the price. All we had to do in order to catch this move was look at TLT, look at our shorter time frames, just like I tell you to do at points of resistance. Right here is a bundle of resistance, okay? So it makes total sense for this to want to back off here. But it's what happens next. Is this going to fall down, catch some buyers in this mess in here, and then come back up and retest and then go? Or is it going to extend to the upside? We want to pay attention to all scenarios and move like water, right? Just like I said in yesterday's video, I trade like water. And I just dodge. I move around all the rocks around me, all the data reports, everything like that. I just move around it, I move with it, and I go with the stream, okay? So the main takeaway from this video is we got a mixed bag report. That means that people are going to be confused for a few days, but overall in a mixed bag report, from what I've seen in my years of trading, is the current trend will continue until the next piece of data comes out. And that next piece of data is most likely the CPI. So next week we have a shortened trading week because of Labor Day. That could mean that we see another little short squeeze later in that week, and then it leads into the CPI on the 13th of September, and that could be our catalyst for the big downturn. And if you look at, I don't have the seasonality charts in front of me, but if you look at seasonality, it's halfway through September that we start to see volatility spike. So that means the 13th of September is the perfect time for this to happen. So hopefully you guys were able to play this. Hopefully you learned from this video. If you liked the video, please, if you felt you gained anything from the video, like and subscribe, and tune in for my nightly report. Oh, I forgot to say, peace.